Hello and good morning on this fine May 11th. I'm joined by Alex Cole. My name is Tyler Wood, and we are coming to you pre-market on Thursday, May 11th with our GoNoGo show for the week. I know you're viewing this here at the end of the day, but we're going to do our best to isolate the trends that are in formation that should help you steer your portfolios through the week. Alex, how are you doing this morning?
Doing very well, thanks. I'm up in the mountains of New York for a very enjoyable little getaway. So
excellent. Well, we won't keep you too long, and very well done. Getting out in nature is the best medicine. So let's dive right into the top of our list with the cross-asset GoNoGo heat map. Let's give our listeners a little taste of where the markets are at from a broad asset class perspective.
Yeah, it's been interesting because the Go trend in equities has been able to hold. We've really moved sideways and there's not been a lot of progress made, but we do see the Go bars remaining in place. And even though they are weaker, we're seeing a string of aqua bars. The Go trend in equities is still in place. That's the top panel, of course, here. Treasury bond prices have struggled again this week and rolled over into no-go bars, and commodities hanging on to a weaker no-go, and of course the dollar still in a no-go but weakening as well this week.
Mm-hmm. Absolutely. And let's take a look at some of our cross-asset charts. Let's start with the TNX. Take a look at what's happening with Treasury yields as we face the debt ceiling crisis, and there's more chatter about U.S. default on its debt, and Janet Yellen is calling corporate CEOs. We really don't worry about any of that. It's all going to show up in the price charts.
That's right. And still in a no-go. So not seeing that reaction yet to higher rates. We've got the no-go still in place. Not a lot of movement down or up, a sideways movement here, as you can see on the right side of the chart. We haven't gone down low enough to test the lows from the beginning of April, but the no-go still holding on to the trend. Interesting, the oscillator was sort of up and around the zero line, briefly burst into positive territory, but now is back below, getting turned away by that zero line. So at the moment, no-go in place and momentum returning in the direction of that no-go trend.
I think we're going to find a consistent theme throughout a lot of the charts that we look at today. Just as Alex and I were preparing for today's show, when there is such a convergence, when markets are so tight and range bound, we're not seeing breakaway leadership from various sector groups. We're not seeing very sizable or high velocity trends in any directional capacity. We're seeing a lot of chop right around these inflection points. And I know for a lot of you, you're looking to differentiate, looking to find those things that are outliers. And that's what we're here to do as well. But certainly the market is showing us that right now, there's a lot of uncertainty and a lot of range-bound activity in terms of price action. So let's move away from the TNX. Let's take a look at the US dollar.
Same thing can be said really for the dollar. We've got this sideways movement as price struggles to either move higher or go down and test the lows from February. But the no-go remains in place. Look at that congestion around the zero line with the oscillator. We saw a couple of squeeze build-ups here. We're in one right now. It's actually at a max. So we're in a max go-no-go squeeze as the oscillator gets stuck at zero. So remember, that squeeze is showing us that there's a real tug of war between buyers and sellers as we struggle for directional momentum.
And we know from prior shows that you may have watched with us that max squeeze or volatility compression can happen in one of two places, either in a trend continuation pattern where we've made a strong move in one direction. The markets are sort of digesting that move. Buyers and sellers are deciding whether it can continue, and the direction of the break then continues in the direction of the trend. It can also happen at a point of trend reversal. So either in bottoming formations or topping patterns, we can see that range narrow and some of the indecision play out in terms of the momentum being stuck at zero. So right now we're in that max squeeze here on the US dollar, trying to find some directional leadership from either the bulls or the bears. Alex, let's move on from the US dollar and let's take a look at gold. Here we have a little different shape of the trend.
Yeah, gold has been one of the stronger performers this year, really, since the end of last year. And we are still in a go trend now. Again, we're seeing weakness in the trends, either if they're in a no-go or in a go. So in this case, we're seeing gold in a go trend, but showing some weakness here towards the right side. We see quite a lot of aqua bars. And again, you saw a squeeze build showing that sort of reduced volatility in price. You can see how small these price bars were as we moved through the end of April. And now we seem to have got back into positive territory on heavy volume and found some support at zero again. So we'll be interested to see if gold can make new highs once more.
Absolutely. And again, here on the GoNoGo show, we use ETF proxies for spot prices. So we're tracking volume on gold using the ETF GLD.
That's right.
Alex, let's move on from gold. Let's take a look at U.S. oil. Another heavy set of the inflationary regime.
Yeah.
And it is still drifting lower.
This chart feels like it's moving at a snail's pace, right? I mean, we've looked at this chart for the longest time, and it's really not that damaging of a no-go trend, but it certainly hasn't been able to break out of it, and we're just creeping lower. We come up to test this downward sloping trend line, and we've been rejected at that level so many times. Now we're in strong no-go bars. Momentum has just broken back below the zero line, and we're just sort of slowly meandering lower on the price of oil.
Alex, just for a change up this week, let's look at diversified agricultural products. There's an ETF DBA, and we talked a lot about that in the the start of this longer shaped commodity cycle. Notice that left its no-go trend recently. And yeah, I see exactly what you're doing, throwing a horizontal trend line on there.
Yeah, I mean, you can clearly see that something has changed here. So commodities as a whole, not suffering the same fate as oil. You can see that this was sort of a very similar looking chart, but in this case, we've broken above the resistance of this slightly downward sloping trend line, and we're in go bars. And if you look at the oscillator, this is a good sign, and very interesting. Oscillator broke below zero right before the end of this go trend, and then was staying on the negative side, finding resistance at that level throughout this no-go move. And then all of a sudden, when that zero line failed to hold as resistance, we see it become support. And now, of course, the go trend follows. So a different looking chart here for diversified agricultural products than for oil.
Absolutely. This is a little technical analysis 101, and I know that our viewers have heard us talk about polarity over and over and over again. But you can see it really mirroring from both the price action as well as the momentum oscillator, where we were above that zero line, positive momentum. Once broken below, that neutral area became resistance. We maintained negative or neutral momentum throughout the no-go trend. And then you move back up to the price panel. What was support on that trend line, once broken, that same line becomes resistance. And this is just an exercise in human psychology, but multiple tests of that downward sloping resistance line. And once broken through, what we're looking at is for that line to hold as support. Looks like it's retested on an intraday basis, and some sort of constructive evidence for this new emerging go trend.
Yeah, and just to point out, I mean, we wanted to create this objective level, like you just said, that could be used as support and resistance, and certainly in that case of polarity. But look at this go trend and how it was supported every step of the way by the zero line. And then, of course, when it wasn't, now we flip it and we start to look at it as resistance. But a very good chart here of how we would interpret and use the oscillator in the lower panel.
And that's really the tenets of trend following, right? If we can be objective about when we are buying dips, right? When we're in a go trend where momentum finds support at this neutral level, see all of those green circle icons. Alex and I are big believers in data visualization. And just to cue your eye to the price action, every time momentum finds support at zero, we see those as trend continuation icons, meaning momentum is surging back in the direction of the trend. So as a trend follower, if you're holding some DBA, you might add to that position. You might re-enter that trend if you had not already been participating at those trend continuation icons. Alex, let's move on from the commodity space. Let's take a look at our fifth asset class. Let's take a look at the crypto rel map. And we've been talking for several weeks how the top four by market cap digital assets had been outperforming the S&P 500. And what has changed this week on the daily basis is that we have seen these four roll over against the S&P 500. Now, these are relative charts. It's a ratio of the cryptocurrency to the S&P index. But you see those dark purples in a strong no-go relative chart to the S&P, meaning they're not necessarily going down on an absolute basis, but they are underperforming the rising equity markets. And I think that's that's a fascinating look at risk on and risk off as investors are thinking about allocating to perhaps slightly lower beta, lower volatility securities, and we're seeing equities perform stronger than the cryptocurrencies in this rel map. Alex, anything else that we want to pull out?
No, just that even on the price panel here, of course, is Bitcoin, and you can see that Bitcoin has indeed gone into a no-go trend on its pure basis as well. So relatively all underperforming, but Bitcoin itself flagging a no-go as well.
On that absolute basis. All right, let's take a look, and we haven't done this in the last several shows, but let's take a look at our global equity rel map. And what we've always talked about is how there is a trend somewhere, right? And we've tended to invest heavily in North America, in the United States. They call that the home bias, the behavioral economists do, and it's paid off well for American investors. If you are a believer in our technology sector, which really sets the U.S. economy apart from the rest of the world, that has worked very well over the last decade. But what we're seeing on this global equity rel map right now is favoritism, leadership, outperformance from the Eurozone, from the United Kingdom, from the Bovespa, the Spanish index. We're seeing that across the board, as well as a couple of outliers. So within the Latin American region, Mexico is outperforming the United States on an index level. Other Latin American countries underperforming. And then, of course, in the Asia Pacific region, we're seeing Singapore outperform the S&P 500 at that index level, where we've got Hong Kong and China and Thailand really underperforming. So when we take a look at a global equity rel map, of course, there are many other country level ETFs that we could include in this. The list gets a little too long and it gets cumbersome for the eye. But what we want to keep in mind as global investors, particularly in this frictionless world that we're in now, where we can find liquidity and access foreign equities through ETFs, is that there are opportunities both inside and outside our borders. So when we think about our asset allocation, it doesn't just have to be in our own home country. We can participate in trends from around the world. So let's move on from the global equities rel map, and let's take a look at the style boxes. We've talked with a lot of our clients. It seems pretty obvious. When we're looking at breadth measures and where leadership has been in the S&P 500. When we dig into something like the Morningstar 9 style boxes, right? Small cap, mid cap, and large cap, growth, value, or mixed. What we're seeing is that everything is underperforming the S&P 500 except for large cap growth. So that's the Vanguard Large Cap Growth Fund in that panel that Alex is pointing out. That's the only thing that's outperforming. So when we think about our asset allocation, or we think about where we're looking for idea generation, there's going to be more opportunities in that sort of style set than we would find in small caps or mid cap value. And there are shifting times. This trend will not last forever, but right now that's where we're seeing the outperformance.
Yep.
So Alex, let's shift back to just our chart of the S&P 500. Let's take a look at the price action. We've had some choppy days, strong ups and strong downs, and the momentum seems to be locked right around that neutral level on the daily basis. What can we gather from this trend? And I was just going to ask you, areas of resistance.
Yeah, I think that it's just in the same holding pattern almost that we've been in for several weeks, and not too much has changed. The only thing that I'd point out is we did fail a couple of times to make new highs. If you look at where my track mouse is, we were trying to go higher than those early February highs, and we haven't been able to do that. And what I've noticed towards the right side is then momentum has dried up, right? So if you look then towards the bottom panel on that surge higher out of the squeeze break, we moved higher, tried to test those levels, and then really there's now a tug of war happening. We're sort of flirting below and above the zero line, and we're now right back at it. So this is, you mentioned at the beginning, inflection points everywhere. This is going to be telling what happens going forward. Where does the momentum come from? Does it go back into positive territory significantly, or sort of clearly go back into positive territory? That would allow us to make another attack on these highs. If it breaks back into negative territory and goes clearly lower, then we could be looking at areas down here on the chart and hoping that we set another higher low. So at a very sort of important point at the moment. Of course, the weight of the evidence suggests that we are still in this new go trend, and it's painting aqua bars. But we would definitely want to see the oscillator break back into positive territory.
Absolutely. And so, as we've learned from Charles Dow, we want to look at multiple time frames to get an understanding of what's happening. Particularly when we're at this kind of inflection point, it's helpful to step back, to zoom out a bit, and it's amazing to see that series of higher lows and just consistent resistance at these current high levels. From the weekly basis, we're still in a strong go trend, meaning the volatility that we're seeing on those shorter time frames has not taken the trend configuration out of its stronger go trend. We're also seeing stronger momentum. We're at a 3 on the GoNoGo oscillator for this weekly trend. And Alex, if we jump down to perhaps an intraday period, let's take a look at a 30-minute chart. So for those of you who are trading shorter term, you can use GoNoGo Charts to your advantage in this way as well. Obviously, a lot of chop, but that's all right. So what we're seeing on this 60-minute chart, if you back up just a little bit, when you are in that weekly and daily time frame in a go trend, timing your entries on a shorter intraday basis is perfectly logical, right? Where we've got the primary and secondary trends moving in an upward direction, coming in to scalp some of that profitability on a shorter term chart can certainly work to your advantage. And that gets you out a lot earlier as those no-goes roll over. I think what's really challenging for intraday traders of any time frame is just dealing with that volatility. And when we are at resistance levels, the chop or the mean reversion at those levels can be really frustrating in terms of not capturing much of a trend. Yeah. Just wanted to point that out, that the GoNoGo chart is going to work the exact same way on every single time frame.
Yeah, and I think to your point, you want to line up your overall market directional bias with your trading. So in this case, if you are looking at the weekly as a go and the daily still as a go, then you'd be only looking at goes on the shorter time frame. So right away, you're minimizing your trading, right? And you're putting your your style to work in line with what you're seeing from the larger time frame. So you'd be only looking for opportunities to participate, and not getting involved in the whipsaws when they go to no-goes. And then, there's so much you can do with multiple time frame analysis, as we know, using momentum oversold conditions to get you entries. So all of your normal technical analysis can apply with that multi-time frame approach, but knowing what side of the market you're looking to be on is really the first step.
Absolutely. And so for those who are trading index futures on shorter time frames, that's a really great life lesson in looking at sort of multiple time frames in your analysis to make your trading plan. But as we know, Alex, it's not a stock market; it's a market of stocks. And so let's get out of just the index level. Let's take a look at our sector rel map and see what's happening under the hood of the S&P 500. And this is on a daily basis. We've seen some changes taking place in terms of our leaders of the last few weeks, really struggling to maintain a leadership position against the benchmark index. We've seen technology flirting with the neutral levels. We have also seen our healthcare sector fall into a weaker form no-go trend versus the S&P. So that leaves us with a couple of options. We've got communications and consumer staples still outperforming this rising S&P 500. Fascinating bifurcation in terms of the styles, both offense and defense. But Alex, let's dig into the consumer staples group. Let's take a look at the industry groups within that sector.
I think it's interesting just looking at this chart that the sectors outperforming has become less, but they're still at extremes. It's still that bifurcation, right? Instead of it being tech and communications and staples and healthcare and utilities, now it's just communications and staples. Still that bifurcation, even on a more narrow basis. But yeah, sorry for that. Let's get into.
No apologies needed. And I think what we're seeing as more and more sectors are underperforming or at neutral, it comes down to that very narrow range of price action.
Right.
At those inflection points, we've seen a lot of things converging. So within the consumer staples area, we've got a few industry groups that are outperforming the sector. So again, when we do this relative work, we're looking from a top-down perspective. We started at the asset class, equities outperforming on an absolute basis. We're digging into the sector groups. We're seeing consumer staples outperforming the benchmark index. Now we dive down another level to look at the industry groups within the consumer staples sector. And Alex, it feels like springtime. It feels like maybe March Madness and St. Patrick's Day bled right into Cinco de Mayo. Maybe beer is the place to put our money to work. I certainly I've been trying not to put too much money to work in our household, but that DJUSDB is the Brewers Index.
Yep.
And yeah, in a recessionary economy, people still need to drink a cold can of beer at the end of a hard day. So we can dive into the Brewers Index and start taking a look at some individual names. Why don't we start with Compañías Cervecerias, which is a Latin American brewer food company. They produce both alcoholic and non-alcoholic beverages. So we're seeing some of that lift in the consumer staples area. But look at that wonderful go trend.
Yep, and bear with me while I put this channel on here, because I think this is a very interesting chart. We've just broken to new highs, and as you talked about polarity before, we've retested them again already. And again, just to look at the oscillator and how these charts, how the two panels work together, go trend supported throughout with the oscillator finding that confirmation and that resurging momentum at zero over and over and over again. And then, of course, when that fails to happen, we get that correction that takes a little bit longer. And then we have a max go-no-go squeeze here that's broken into positive territory. We find support again, and then that gives us the push that we need to get above two new highs. Sorry. So an interesting chart there. Of course, we are seeing now some counter trend correction arrows because the oscillator was overbought, and that's caused the price to come back and test the support here from that prior high. So a very good looking chart here. We look for oscillator to stay in positive territory, to continue to find support at 0, and then perhaps for price to set new highs again.
Absolutely. Certainly a much better looking chart than that 60-minute S&P chart that we were looking at, in terms of having some direction, having some trend. The Jimmy Buffett song, there's a trend somewhere.
Right. That's right.
Let's move on and take a look at a couple other brewers. TAP, which is the Molson and Coors brewing companies. TAP is the ticker symbol. Let's pull that one up and take a look at what we're seeing in terms of another strong go trend. If you take a look at European beer companies, you're also going to see some outperformance, which I find pretty interesting given our global equity rel map, that we're seeing the outperformance in both European and Latin American brewing companies. From all of us here at GoNoGo Charts, thanks so much for listening. We'll see you again every Thursday at 3:30 p.m. Eastern. Take care and be well.